Okay, so I think we'll get started. So I'll pass it over to James and Sarah to do the introductions.
Thank you, Janvi.
Okay, thank you. Good evening, everyone. Welcome to the first in our series of webinars, Demystifying Financial Principles for Healthcare Professionals. My name's James. I'm going to be an FY1 in the Oxford Deanery, and I'm assisting Sarah this evening, the finance medic. I'm going to be posting links and questions in the group chat throughout the session, so keep an eye out on the chat. And we'd love for the session to be interactive, so try and be active by replying to things in the chat, and we're more than happy to take questions as we go. So either kind of post in the chat, or you can use the raise hand function, and I'm basically just here to draw Sarah's attention to it. All of the seminars that we're going to do are going to be recorded and available to you after the seminar is finished. There's also going to be summary articles for each talk going live on the Mind the Bleep website after the session finishes. And as you're probably already aware, all of the sessions, articles, resources, they're totally free. All that we ask for in return is some quality feedback. So ideally not just that was good or I didn't like this, but kind of thought out comments that we can actually use to improve the content for you all, and slightly more selfishly so that we can kind of reflect about it, talk about it in interviews and use it as evidence for our portfolios and applications in the future. And I will pop links for the feedback in the chat towards the end of the session. So just take 5 minutes, please fill it out, and you will all receive a certificate of attendance by medal once you've submitted the feedback, which you might find useful as evidence of working towards leadership and management skills, which form a large part of all your applications in the future. So now it's my pleasure to introduce Dr. Sarah Asher. Sarah is doing an AFP in the Oxford Deanery. She's a qualified chartered accountant and has experience at the National Audit Office as well as in the private sector. She is the brains behind the whole of the series, and she's really keen to share her knowledge and experience with you all. So over to you, Sarah.
Thank you, James. That's really kind. So I'm going to jump straight in. So today we're going to talk about credit scores. What we're going to talk about is why is this credit score important and what makes up the credit score? Specifically, what is it? How is it calculated? Can you influence factors that might change your credit score for the better? And how we can actually do that. First of all, quick intro, this is me. I'm an FY1 at the Oxford Deanery, and I'm super excited to be giving you my first session. So why is this credit score important? So it's a 3-digit number that lenders use as an almost pass-fail to decide whether they're going to lend you money or not. Your credit score is used from everything, such as when you're applying for car finance or an overdraft, to things like your phone contract. So you can actually be turned down for a phone contract if your credit score isn't high enough. It takes quite a long time for you to grow a good credit score. It takes very little to then bring it down. So if you have a good credit score and you're doing really well, you have to keep doing what you're doing, and you have to be very careful not to make any silly mistakes, because you can actually really significantly affect your credit score with something as small as missing a bill payment. And if that happens, it will take a long time to then rebuild your credit score. And lastly, the better your credit score, the better interest rates you get on when you borrow money. Lenders will use a higher interest rate for people they think are at higher risk of not paying them back, because it means that every payment they do receive, at least they recoup a little bit of those losses. Whereas if you've got a really good credit score and you give the lenders an idea that you're more likely to repay them on time and fully, they're going to give you a better interest rate, because it's better for them to keep you and your loyalty than it is for them to try and make extra money out of you. So why does this matter? Let's talk about Dr. Chase here. So Dr. Chase is 28 years old. He, once again on the property ladder, he's built up enough of a deposit and he's applied for a mortgage. Now, Dr. Chase didn't check his credit score. It was 546 out of 999. He's missed 2 payments on his mobile phone contract 3 years ago. And this was because there was a mistake when it was being switched from one contract provider to another. They didn't do it on time. It was an error on their part, and that resulted in 2 payments being late. He has a credit card, which he uses to the max every month, but he does pay that off at the end of every month, which means he's not carrying over that debt month after month. He's registered on the electoral register where he lives, and Dr. Chase is ready to get on that property ladder. Unfortunately, with all of this, his application outcome was rejected. So I'm going to talk about why it was rejected, what in his background, what in this information is actually going against him and going for him. So the fact that his credit score isn't that great, I'll explain a bit more about what a good credit score is, but his credit score is not that great. It would probably be around the fair or good mark. Most lenders will have a credit score cut off between the good and excellent mark. Again, I'll explain what that means. He's missed 2 payments. That is a big, big problem. Your credit score or your credit report is based on 6 years worth of data, which means even 4 years ago, 5 years ago, you missed 1 mobile phone contract payment, that is going to hit your credit score. Now, the good thing was he wasn't at fault. It wasn't him who missed that payment. It was because of a genuine error that was made at the time. What he can do is contact his contract provider, ask them to rectify his credit report. And it is a bit of a faff. He'd have to go and do lots of phone calls, write lots of letters, but it is possible for him to go back and have his contract provider say it wasn't his fault, it was because there was an admin error at the time. And that might help him improve his credit score. His credit score is probably currently affected with the fact he's got 2 missed payments on it. Next, he's got a credit card, that's a good thing. He pays it off every month, that's a good thing. The problem is he uses up all of the balance on his credit card. And if you're a lender and you can see that someone is using their credit card to the full every month, it might suggest that they're living paycheck to paycheck, that they might not be covering their cash flow as well as they could. The best way to use a credit card to build a credit score is to use around half the balance or less and pay it off every month. That way, you're showing that you don't need to use all the credit that you've got, that you are actually fairly comfortable, but you're using the credit card for big purchases or for day-to-day purchases, which you can easily afford regardless. And that builds a really good credit score. And lastly, he's on the electoral register where he lives. That is a very good thing. Address stability can really increase your credit score because if you're stable in terms of address, it means that you can be tracked down, it means that you're reliable and that you're more likely to be making regular payments, either if it's rent or a mortgage. All of those things, they make you sound like a more reliable person to lend money to. So always remember, if you move, make sure that you change your address with your bank and your driving license and any other memberships that you have and your phone contracts, and make sure that you have signed up to the electoral register where you are. Every time you move, your credit score will take a hit, but it will be fine as long as you stay in that place for a couple of years and then your credit score builds back up. It's just one of those things we have to accept, unfortunately. It's not something we can prevent. So if you're like me, I moved for uni pretty much every year because I was moving to house shares, and I ended up having quite a hit on my credit score because I appeared unreliably addressed. And so my credit score took the last 3 years to recover as a result of that moving around. It wasn't anything to do with the ability for me to pay. Unfortunately, we just have to take that hit. Poor Dr. Chase. So this is what a good credit score looks like. This is Experian's credit score matrix. There are different ones, there are 3 different ones. So this shows that out of 999, the last sort of 750 to 999 is good and excellent. And then you've got your poor, fair, very poor. And so Dr. Chase would have been in the late, fair, early, good area. The higher your score, the better you are. And that's what we're trying to aim for. That's what we're going to do. We're going to come up with ways to improve our credit score. So things to consider now that you know that information: you have to check the accuracy of your credit report. You have to make sure that any information they have on there is absolutely correct, both in terms of if you think there should be there's something they're missing, which might affect your credit score negatively, you still have to make sure it's on there, because if that's found out later, then you can be seen as someone who's covered up information, and that can really affect your credit score poorly if you're found out. So say you've got a credit card that hasn't appeared on there, may have had a couple of missed payments. It would actually be better being honest and saying you've missed this credit card off than to actually just let it lie low, because there's 3 different credit agencies that use your information. It will pop up, it will come up. And that's going to affect you negatively if you've used a credit score that isn't accurate to apply for something and been successful because of it. The next thing is the time that's passed. You need to make sure that when there's incorrect information on there, you deal with it as quickly as possible. The further away you get from it, the harder it is to correct. Imagine Dr. Chase having to ring up someone from 3 years ago, find out the exact month that he missed the payment, and tell them, please, can you correct it? It's not going to be fun. So make sure that the time passed is as little as possible, and to make sure that your credit score hasn't been affected for that long, because that can count as well. And look at the current usage as well. So when I say current usage, I mean of all your accounts, not just your credit card accounts. So if you've got 2 or 3 current accounts and you're not using one of them, get rid of it. If it looks like you have loads of unused accounts, unused credit cards, it suggests that you don't actually need that much credit. They might wonder why you're applying. And conversely, it might also mean that you have all this extra stuff. Is it likely that you'll be able to afford to pay them back if you've already got these products and you're not using them? So these are the kind of questions it raises. So make sure that your current usage is as accurate and as close to what you actually use and need as possible. Those are the 3 things I would consider. So how is our credit score calculated? Different lenders have different ways of weighting the credit score. So there's 3 different credit agencies. The first one is Experian, second one is Equifax, and the third one is TransUnion. They're the 3 main ones that lenders use. You want to make sure that you've checked with at least one of them, ideally 2 of them. Experian and Equifax let you sign up for free and do a 30-day free trial. You can get a copy of your report, print it off, and then just cancel your subscription. That way you get a good idea of what information is being held about you and being used. But they will have a different way of calculating things, and they will have a slightly different scale. But the 3 things it comes down to is old debt. How old is your debt? If you have really old debt on your file, it suggests that you're struggling to pay it off, that you might not be able to afford to pay off any new debt. Again, if there's 2 new debt, then you've probably already exceeded your affordability, because they'd only give you what you could afford, and you might not be able to pay it back. That's their thinking. So your old debt can't be too old, your new debt can't be too new. I know it sounds really weird. It's sort of making sure that you time your applications in such a way that you're not falling foul of either of these things. And then your payment history. Again, I can come back to this. It's the last 6 years, and it has to be faultless. You can't have a missed payment on there and not have a big hit to your credit score. So I would be very careful, have a look. The main things that are going to be counted as missed payments are going to be things like your phone contract, gym memberships, car leasing, any sort of like credits, like store credit, things like that. But they will appear on your credit report. So as long as you go and have a look, you will actually be able to see what's been counted against you if there are any missed payments there. Okay. So these are our influencing factors, negative and positive, which then affect our score. We've already gone over the number and utilization and the age of your accounts. You don't want to have too many accounts. You don't want to max out your credit cards, because it suggests that you're not able to pay them off straight away. And you don't want to apply when you've only just applied and gotten credit or loans elsewhere. So if we talk about a typical example, say I got a credit card, it was funds, and I used it to get a holiday. I'm still going to need another credit card for my day-to-day shopping, but that already sounds pretty dodgy. You wait maybe 4 months to 6 months, that way your credit card is they've had a chance to see that credit card, to see that still able to afford to pay off more credit, and then you apply. Because too many applications one after another will also cumulatively hit your credit score, especially if they're rejected. Missed or late payments, heavily weighted, we've just talked about this. So it suggests you may not be able to reliably pay on time, heavily hits your credit score, might give you more likely of being rejected in your applications rather than being offered a worse interest rate. People tend to be quite risk averse in this area. And then again, the address. The longer you spend at one address, the more reliable you appear, the better your credit score. Make sure that your address is updated across the board and you're on the electoral register. That's a big deal. And now improving your credit score. So we talked about all the different things you can do. I'm just summarizing here now. We sign up to the electoral register. We make sure we don't have too many accounts. We pay on time, and we don't use all of our credit at once. We use about half to less than half of it every month. Okay. So you're gonna wanna know, okay, you've told me all this stuff. How do I find out what my score is? There's actually really handy things that you can use. So to actually just find out your score, I would suggest downloading these apps. So Money Supermarket, ClearScore, and Experian all provide a free app that can just tell you your score, your 3-digit number. ClearScore actually gives you a free credit report. So if you were going to do any of those first, I would do ClearScore. The next thing is to actually get a full report. Now, ClearScore isn't one of the 3 official reporting agencies that lenders use, which is why getting that report is not going to be enough if there are any issues and if you really need this application to be approved. So for example, if you're applying for a mortgage, you don't want to just use the ClearScore report because that's not what the lenders will be using. You want to get at least a copy of your report from Experian and Equifax because they provide them for free. TransUnion is a paid service. So Experian, Equifax, you sign up, you get your 30-day free trial, you print off your report. All of these are technically paid services, but if you cancel your subscription, they're not. And they will give you tips and tricks on how to improve your score if it's not great. The best thing about this is, though, that it gives you the exact information your lender is going to use. So you can be fairly confident whether your application is going to be approved or not. And then lastly, useful resources. If you have any more questions, if you're a bit confused, Saving Expert is really, really good in just providing practical examples. It also helps you find, so if you look up credit cards for someone with a poor credit history or how to build my credit history, it gives you a very good step-by-step way of how to do that. Medix Money is a website run by 2 doctors, 2 GPs, one of them is an accountant as well, and they provide access to others, accountants and mortgage advisors who specialize in money for medics, who specialize in investments, in mortgages, all of that for doctors. They understand the market, they understand the different products that are offered to NHS people. So for example, I will be doing a seminar on mortgages, but I don't know how many of you know that mortgages, they're actually special rates for doctors that you can't access on the market. You have to go through a specialist mortgage advisor who has access to those products to be able to get one. And then lastly, shameless plug from me. I will be putting an article up after this. For every webinar I make, I will also be putting up an article and summarizing what I've gone through. So the article and the webinar hand in hand should provide you with quite a good idea of each of the topics I'm going over. So in summary, make sure your report's accurate, make sure your reports and data is up to date, make sure your addresses are up to date on all your memberships, your driving license and your bank accounts. Check your mobile phone contracts that you haven't missed any payments. I am banging on about mobile phone contracts because I know about some famous footballer who had his mortgage denied because he'd missed one payment 5 years ago on his mobile phone contract. That might be an urban legend, but it's always stuck in my head. Get a copy of your credit report as well. You can do it from those 3 places I recommended, and just be proactive. Just make sure that you're on top of your credit report. Just have a look. Once a month, you'll get a new score or an updated score with the information that's been going on over the last month, just have a quick look at it, make sure you're happy with it. If there are any issues or if things are different that you weren't expecting, jump on it straight away. Don't leave too much time between identifying a problem and doing something about it. James, do we have any questions or anything from our audience?
No, actually, due to some issues with the access to the Facebook account, I can't actually view the questions, but I don't think there have been any.
Okay, that's fine. So if you guys have any questions, just jot them in the chat or in the comments, because one of us will be able to pick them up. I'm sorry if we've missed them. And I will make sure that I answer them on the article. So do go and have a look at the article if you've asked a question, because I will be able to answer it on there. So I just want to thank you all for your attention. And back to James, who's just going to tell you about a few things.
Okay, thank you very much, Ty. That was very informative, as always. And yeah, I definitely reiterate what you said about Medic's money. There's some really interesting stuff that's tailor-made for doctors and kind of final year medical students. But yeah, I would have found out without it. So yeah, apologies if you have asked any questions on the Facebook group due to some access, not being able to get on there and have a look at them. But we'll make sure we address them and sort it out for next week. So I believe there should be posted on the video a link for next week's seminar, which is about current accounts. There will also be a link for feedback, which is appearing here in the video, but should also be down in the comments, and a link to the article, which goes live at, I believe, 9 o'clock. I just wanted to reiterate, yeah, please give us some feedback, have a little think about what you liked, what you didn't like, what we can improve, and like I said, giving us something that we can do something with is really, really useful. So thank you very much. Any questions at all, just, yeah, stick them in the chat.
Okay, great. Thanks, Sarah and James. That was really informative. I put the feedback link and everything on the comments. Oh, we do have a question actually, Sarah, if you're okay to answer it.
Yep, definitely. What factors have made this a poorer score? What factors in the case have improved his credit score?
No, not that one. That's James. There's a question for Sulman in the chat saying, apart from a credit card, phone contract, gym membership, what else can we use to improve our score?
So credit card is the best one to use. Mobile phone contracts, everyone has. Gym membership, everyone has. Unfortunately, you won't be able to access the kinds of products that you might be able to use at the moment. So say you're a student or a very young doctor, things like investments, you could use those, but I don't know if those are the kinds of products you can access. So the best thing to do really is to get a very low balance credit card, something like £500, spend £30 on it a month on your grocery shopping, and then pay it off straight away. Your credit will build so quickly just doing it that way. There's a lot of student credit cards that do that. So I understand NatWest does a £500 student credit card, and you can use that to build your credit really, really quickly.
Okay, great. Thanks, Sarah. We've got another question from Mohammed saying, does checking your credit score affect it in any way?
Not at all. So checking your credit score is not going to hit your credit. So it's only when other companies are checking your credit score in order to give you a product. So it's called a soft search when you're looking at your credit score. Also, when you're doing things like going on confused.com or moneysupermarket.com and looking for products like car insurance or home insurance, they'll have a quick look at your credit score. But again, that's a soft search. That's not a hard search. A hard search that ends up on your record and ends up hurting your credit score if you don't get accepted is things like when you're actually applying for a loan, a mortgage, or a credit card, where you're actually going to get credit as a result.
Okay, perfect. Thanks, Sarah. So I don't think we've got any other questions at the moment. But if you guys do think of anything, then feel free to either comment on Sarah's post on the website, or you can email the generic info@mindthebleep.com email address, and we'll make sure that Sarah gets it and can reply. Otherwise, you can just post comments. We'll continuously check this. Oh, sorry, we do have one more question. from Yiha saying, sorry if you've already mentioned this before, but for someone with no credit history, what credit score can they expect for the first time that they check it?
I really don't know, because actually James and I checked our credit scores together, and James had never checked his credit score before. He's never had a credit card, and he had 999 because he'd never changed his address. So you'd be surprised how good your credit score might be if you've never had any credit whatsoever, but your address has been the same all these years and you've had a phone contract, because people don't realize their phone contract actually counts on their credit report. If you've had a phone contract and you've never changed your address, you might actually have an excellent credit score.
Okay, great. So would you recommend checking your credit score as soon as possible just to get an idea of where you're at?
Right now, just leave and go and do it. It's the best thing you can do. The quicker you do it, the more quickly you can sort out any issues with it. And you don't want too much time to pass between finding an issue and doing something about it. So yeah, just check it straight away.
Okay, great, thanks. I think this time it's actually it for the questions. But if you guys do have anything else, just comment on this post or all the other ways that I've said. And hopefully we will see you guys next week at the same time for the next webinar. So take care and bye.
Thank you, everyone. Bye.